Good evening, everyone. My name is Abdul Kamara. I'll be presenting about accounting for Sukuk. So first thing first, before I define what Sukuk is, I'll need to tell you what a bond is because there is a misconception about these two being the same when exactly they are not the same. So what is a bond? A bond is a loan which pays interest in fixed term or period when it reaches maturity at the end of the term. So what this is basically telling you is that for investors in bond, there is a fixity of a return on the principal amount. So however, in Sukuk, the plural for sukuk is sak, which refers to an investment certificate. It could also mean a trustee certificate. So sukuk is dated back in the first hijrah. This is when the Prophet Muhammad sallallahu alaihi wasallam migrated from Mecca to Medina. However, Imam Malik in his famous book Al-Muwatta also underscored the importance of sukuk in the 7th century. This was during the Umayyad dynasty. So during this dynasty, the government issued sukuk to soldiers and public servants. This goes to show you that sukuk is not a recent phenomenon and has been in existence since the 1st century of Hijrah. However, in modern day sukuk, there are two important bodies that have played significant role in the development of sukuk. First one, which is Fiqh Academy. Fiqh Academy is an organization that composes of prominent scholars all over the world who discusses issues of Islamic law and passes resolution. Now, in one of their resolution, which dated back in February 1998, sukuk was discussed there. Now, the second important body is IOFI. IOFI defines sukuk as a certificate of equal value representing undivided shares in the ownership of a particular project or special investment. So here, ownership would translate to tangible asset, usufruct, and services. One might ask, why sukuk? Now, to begin with that, one has to keep in mind that there is no such thing as debt financing in Islamic finance. So the only debt in Islamic finance is Qadul Hasan, which is a benevolent loan. That is one which does not have a compulsion or repayment. Given this, sukuk was developed as an alternative to bond, which is considered permissible by Muslims. While sukuk are intended to raise external financing just like bonds, their operational, legal, and regulatory framework are vastly different because it avoids prohibited elements. Now, what are the difference between sukuk and bond? So however, here I would not go through all these things. I'll only explain two, which is the underlying asset and the total reserve. Under conventional bond, underlying asset is not necessary. Whilst under sukuk, this is a matter of must because this is what made it Sharia compliant. Now, if you go to total returns, under conventional bond, there is a fixed return. In fact, this is a known, it's a predetermined return. So under sukuk, this return is not guaranteed at all. Now, going forward, we talk about the types of sukuk. There are basically different types of sukuk. We have a hybrid sukuk, the mudaraba, the musaraka, ijara, istisna, salam. These are all different types of sukuk. But you could see under this thing, there is musaraka, which is vastly used by Malaysia. Ijara, it's globally. It appears that Ijara-based sukuk are now the most popular. This global acceptance of the Ijara sukuk may be due to the fact that it fits the requirement for a tangible underlying asset, which is clearly identifiable and has a fixed timely payment and cash flows that are binding. Next, let's talk about the different categories of sukuk. Basically, there are two different categories of sukuk, which is asset-backed and asset-based. So now, what is asset-backed? Asset-backed and asset-based are two technical terms that have two different meanings. Asset-backed are closer to the aspiration of Sharia. This is because in asset-backed, the sukuk holders actually owns the asset. This could be tested in two ways. In the first way, to test whether this thing is authentic. Now, in the event of default, the holders have recourse to the asset. Now, it is imperative to test the authenticity of any Islamic product because the whole idea of Sharia is to get rid of riba, gara, and to avoid dispute in the event of default. So therefore, when holders have recourse to the asset, then the sukuk is said to be asset-backed. Now, a practical example will be the East Cameroon sukuk, which was issued in the United States here. The asset was the plant that is used to extract gas. So when the East Cameroon goes bankrupt, the matter was brought to court and the investors won because the plant was there to recourse to. So secondly, to know whether it is an asset-backed, there must be a sale. And this would be observed from the movement of the asset from the balance sheet of the mudarib or the originator, from the balance sheet of the mudarib or the originator or the company to the SPV. If there is no movement, then this is not considered as asset back. So asset base here, the asset remains on the balance sheet of the originator or the mudarib. This simply tells you that the investors cannot or do not have recourse to the asset in the event of default, and this could lead to dispute. So basically, in the beginning, I've told you different types of sukuk, but I cannot explain all the structure. So, however, I'll walk you through the structure of the ijara. So, in Ijara Sukuk, the Mudarib established the SPV. So SPV is a special purpose vehicle, which is a trustee. So subsequently, the SPV issues Sukuk to investors. Now, investors in return pay money to the SPV. Now, SPV uses these funds to buy asset from a vendor. So the SPV, now the owner of the asset, leases the assets to the originator or the Mudarib or the company. Then the originator makes periodic payment to the SPV for the lease asset. Now, finally, upon the SPV receiving the money from the originator or Mudarib, the proceeds are used as payment to the investor, which is basically the return for the investors. Now, next is going to be the Sharia issues. So there have been Sharia issues that have hindered the development of Sukuk. First of all, which is the purchase undertaking, and the other one, which is debt-like structure. So IOFI made an assignment, an announcement which stated that it is not permissible for the Mudarib to undertake during the issuance of the Sukuk to repurchase the asset from the Sukuk holder for its nominal value. However, it is permissible for the Mudarib to undertake the purchase on the basis of the net value of the assets, its market value, fair value, or a price to be agreed at the end of their actual purchase as a result. So the second one is the debt-like structure. Murabaha, Salam, and Istisna. However, I'll only walk you through the Murabaha model. So in this model, for example, the capital is used to buy commodities and sell it to Murabaha cost plus to the issuer of the Sukuk, which become a debt upon the issuer just as a conventional bond. The issuer then sells the commodities for cash in applying fiqh al-mal, which is consideration for the ends and consequences. The Sukuk ultimately represent a debt instrument that resembles a conventional debt security, not to mention the installment, which is the coupon payments. This might be tied to some benchmark rate. However, due to this, IOFI has, as a result, banned their secondary market trading. So the last one is going to be the accounting recognition on the IFRS and IOFI. Now, several jurisdictions use different accounting standards. In the GCC, the IOFI standard is adopted, and other jurisdictions also adopted the IFRS, and Indonesia has their own standard. Now, when accounting for Sukuk transaction, here on the IFRS, the economic substance of the transaction is more recognized. On the IFRS also, the Sukuk transaction is regarded purely as a financing transaction. Now, under IOFI does not generally have a Sharia standard, but there is no special accounting treatment for Sukuk. They do have Sharia standard, but they do not have a special accounting treatment for this. Now, since there is no special accounting treatment for Sukuk under IOFI, we compare the Indonesia and the IFRS. So here, by comparing these two, which is the IFRS and the Indonesian one, we have the valuation basis, the structure, the underlying asset, treatment as issuer, which is in the balance sheet, and also treatment as investor. So under IFRS, this is regarded as a discount rate. But under Indonesian standard, they say no to discount rate because they believe this is tantamount to interest. So the structure is interest rate structure under IFRS, but here it is a lease and also a profit sharing. However, these are the two sukuk that are used in Indonesia. Now, the underlying asset, there is no underlying asset, or it does not necessarily record it on the IFRS, and on the SFAS, it is available. Now, treatment as issuer, as liability here, lease ijara is as liability, profit sharing. Now, if you look at the treatment as investor, here amortized cost based on interest, fair value, which is other comprehensive income, which includes revenues, gain, losses, etc. Fair value, which is on the profit and loss, is based on interest rate in the income statement. Now, however, on the SAFS, it is considered as acquisition cost, fair value of other comprehensive income, and fair value of PL in the income statement. Now, for impairment, it is based on the discount rate. And here, on the SAFS, it is no discount rate. Thank you. That's all from me.